What's up guys, Vladimir here from Home Trader Club. Welcome to the weekly Forex forecast. Before the charts, as always, big thanks, thumbs up to 8K Broker for supporting our community. To continue and enjoy the amazing offers we have together with 8K Broker, including free access to Home Trader Club, all the trading strategies, the trading systems, all the trading tools in the marketplace, private mentoring session and more, please refer to the link below this video in the description. The first pair for today, the euro dollar, and a quick follow-up on the previous. Last week we didn't have a video here. Two weeks ago we discussed about two plans. The first plan was as long as these key supply zone holds, retraces should be considered as a sell. The second option was if the euro managed to break this supply, then we expected to complete final peak before a major retrace down to below 115 again. My view did not change here, and I expect exactly the same. So at the beginning of the next week, this zone should be, the market should decide, either break to the downside or upside. For the downside, we would want to see the euro regaining the momentum by making the lower highs, lower lows, regaining the bearish momentum, and basically goes again, we should see that going below this volume profile. If it managed to go there and act as and hold it as a resistance, we can expect the euro to complete the second leg down. If the euro managed to break through the supply zone, then I would expect to see something like that here until a bearish divergence would complete, and then looking for the reversal. On the daily chart, if this scenario happens, on a daily chart, start to follow for this wedge. This ascending wedge could be a great sign for the reversal. And let's take a look on the numbers in Home Trader Club market trend snapshot. So on the last 24 hours we have the euro in a negative zone, but pretty much flat. The monthly and the 7 days about 1% positive, which could be basically in that case two meanings. One, we are finalizing the bull run, which could classically fit in the wedge scenario, but also that the buyers already lose the control, and the last 24 hours is a story, I would say, for the what to come and the further move to the downside. So that the numbers classically fit in the analysis we made, and these would be the two scenarios I would be following on the euro dollar. Next one is the pound dollar, and a quick follow-up on the, again, 2 weeks ago discussion. We were expecting the pound dollar to continue down and retest the previous low, which happens. The question, what's next? And I believe the pound dollar, pretty much similar to the euro dollar, is yet in under the corrective structure before the next long-term rally taking place. So from my point of view, the bearish pressure is not over, and we expect to see that further to the downside. It could be a little pullback here and then continuation until a new low is created. We also might see that going as a BCD or a range here, and then the break to the downside. Very important is this zone, as we have here key supply level around the 135.50 up to 136 zone. Also huge, as you can see here, with our key trading level indicator, both weekly and daily levels, as you can see, both phenomenal zone. So as long as it holds, the bearish pressure is on the table. If this level would not hold, we can start talking about rallies, but it's a bit early for that. Unlike the euro dollar, the pound dollar is pretty seriously in a negative zone. The 1 month is shifted to below 1%, 1.4%. Last 7 days was some attempt by the buyers to reject, but that usually nothing more than a pullback before continuation. Next one is the dollar yen. 2 weeks ago we were talking about this zone as the area where we expect to see the sellers taking the control. So the biggest question, what's now? What's the case with the dollar yen? And there are two main scenarios to pay attention on the dollar yen. First of all, the existence of this weekly range, which means we can theoretically rally towards this zone 149, maybe even higher towards the 152 before the next move to the downside. On the daily chart though, we are already moving within this range, and that's a corrective range after the 3 waves to the downside, which by itself means sell the rally. So there are two scenarios to pay attention to. One is maybe a retest of this range again, sometimes even an attempt to make a fake breakout, false breakout there before the reversal. What I will be paying attention to is exactly that, sell the rallies. If we get the rally towards this zone, something like that, I would be looking for the next divergences there and go for the sell. This is a very strong area we are facing there in 149, 150. In terms of the daily range, if it breaks through, we are going to the weekly peak or top range, but these rallies, from my point of view, is an opportunity to sell. And in terms of the numbers, we are still positive. The 1 month is close to 2%, 7 days was negative, 24 hours is 0.48. This is a sign that the buyers are still in control, but the bigger the control gets on the monthly view, the more we are leaving the normal range, the bigger the pressure starts to be. And again, it fits perfectly with the analysis and the expectations based on the chart. The final one would be gold, and we discussed the last session we had here that if we manage to get below this range, we are looking to sell the rallies. However, we never managed to get below the range, and the gold managed to make another push up. The question is what's coming next, and I want to remind you that we are still under the bearish pressure from the higher time frame. We are here on a clear overbought condition, with overriding on the upper Bollinger Band for more than 20 candles on the weekly chart. This is a significant pressure, and I don't have doubts that on the coming month we should see the gold after every rally looking for possible sells. On a daily chart, we are facing a potential zigzag scenario, which is 2 waves down followed by a range. And from my point of view, if we manage to break below this zigzag range and go below this volume profile zone, as you can see, that should be a beautiful call to sell on the gold. So from my point of view, again, the sign, the key sign here is should be break below this rising line and hold below there. Then this zone, the volume profile zone, based on the TLI indicator, the key trading levels indicator, should be the green light for further sell. That's how I see the gold. Let me know, what do you see about this one? That would be it for this video, and I hope as always you find value in the trading opportunities. If you do, please don't forget to hit the like button. If you are new to our channel, please consider to subscribe with the subscribe button below this video. I also want to invite you to our trading family, the Home Trader Club, and enjoy your access to our full comprehensive courses, real-time trading education, real-time trading opportunities, and so much more. Join us with the link below this video in the description. Thanks for watching. Best to you and yours. And good trading. I'll see you soon with more. Bye for now.